Hello, everyone, and welcome to the second episode of the crypto series that we are launching, like we have launched. So, we are going to talk about Ether today, Ethereum today. So, we have Bill again to share his views, and I'll also be sharing my views in this recording. So, hi, Bill, how are you doing?
Hey, good, Harry. How you doing?
I'm great. So let's start. So I have few questions that we'll go through. Each of us can give our views on it and then proceed.
Yeah,
So what is Ether? Like what is Ethereum? So what do
yeah,
you understand by it?
yeah. So I mean, Ethereum ultimately is really a decentralized network, um, basically, built around blockchain technology. So although there's some similarities to Bitcoin, like people think of Ethereum as sort of Bitcoin, they're very different animals, right? Bitcoin was built as a exchange of value, a mechanism to exchange value, or now it's become sort of a store of value. And certainly to a certain extent, that's somewhat the case with Ethereum. But really, Ethereum was built around the premise of let's build a blockchain network. Let's build a network that we can run decentralized applications on, and then blockchain is the underlying technology, and Ether is sort of the I'll just call it sort of the virtual token that is sort of the value mechanism that sort of runs the machine. It's some people refer to it as digital oil. It's kind of the oil that makes the machine run. It pays for all those validators and people to maintain the network, right? So it's a very different animal. It's think of it as a computer that runs on a virtual computer that runs on blockchain. So that's kind of how I think of Ethereum. And I think of Ethereum as smart contracts and decentralized applications in a public blockchain.
That's amazing, Bill. So the analogy that you gave, like Bitcoin, it is emerging as digital gold, and more or less there is agreement about that. Then if you have that analogy that Bitcoin is gold, like medium of exchange, store of value, then Ether could be considered as oil. So oil or energy for that matter. So not oil, but probably energy. So energy drives our industrial infrastructure. So the Ether network drives this whole decentralized thing. So that's how I view it. So that's amazing. So what is the journey of Ether?
Yeah, I mean it's been an interesting journey since really sort of 2013, and then sort of the big launch in sort of 2015 when the first sort of the first applications were starting to come out on the network. And then of course today, you look at just the volume of decentralized applications, Harry, that are on the system that are all being driven off of that Ethereum platform, the ERC20, protocol, operating protocol, and it just is. It's been quite a ride, since its early days. A few hiccups along the way, but for the most part, it's been just an enormous ride. And now you're starting to see wider adoption as people are starting to figure out, what this Ethereum network is all about and what it's capable of in terms of the use of smart contracts. So I was always, as much as I was interested in Bitcoin, I was always way more interested in Ethereum and blockchain technology. And this is sort of the emerging as the I'll call it the public blockchain that the market has sort of adopted as sort of a standard. And there's a number of sort of standards that we can sort of chat about today if you want, but ultimately that ERC20 standard is sort of driving the Ethereum network today and these the majority of these decentralized applications.
And you're absolutely right, Bill. So there is a fascinating parts of Ether's journey that people might not be aware of. So all of this started when a 19-year-old kid was playing a video game. So Vitalik was playing video game and the game changed without his consent. So game changed certain part of it and he as a user was having no say in that decision and he did not like it. So that is where the thought came in that when a protocol changes, when a system changes, the users that are driving those protocols need to have a say in it. So he went on this crazy journey of multi years or a decade now almost, right, where he created this decentralized smart contract based applications. There were major hiccups down the road, like the famous one was the hack that happened, the DAI hack that Ether had to face, and that almost they had to change the protocol overnight. The proof of stake was not working then, so it went through a lot of hiccups. It went through multiple cycles where it crashed 90% plus, right? But it is still surviving, and it is second in line to the throne of the biggest crypto in the world. So that is amazing. So what is happening in the Ether ecosystem, Bill?
Yeah, I mean to me it's kind of fantastic to sort of see what's happened. I started looking at this, of course, a few years ago, right? And I've been sort of following Ethereum over the last number of years, and certainly even over the last year. The last 12 months has been just a spectacular rise of applications from decentralized finance, NFTs. We're starting to see a lot of things in the media around those. But I think we're just starting to see the early stages of smart contracts, and just the value of these smart contracts. I've also been sort of looking at on the DeFi space the notion of a universal token. So Ethereum has its token, right now, Ether, and then it kind of runs on the ERC20 protocol. But there's some other protocols that run the NFTs, and they're looking at, well, can we create a protocol where we have sort of a universality of these various tokens, so that we can interchange in various types of products and create various types of products. So I think, Harry, the sky's the limit in terms of where this technology can go. And it's just kind of sitting back, and almost every day there's something new comes out, and to sort of look at and review, but ultimately at the end of the day it comes down to is what's the code, what's the general utility value of what the individuals created, and is there a monetization platform for that, right? So that's really what you have to ultimately sort of shed things away and take a real hard look at. What's the use case, and what's the utility value, and what's the monetization scheme around it, and is there good sustainability based on those premises?
Exactly, Bill. And just to add on to what is possible that you were referring to, like the systems that we have, the monetary systems, the value transfer systems that we have, they are not built for digital age. We have taken that something that is analog, money, and we have digitalized it in some way. So there is still this slow settlement layer that is there. So even if you buy coffee in Starbucks, it happens instantly for you, but someone is taking credit risk. So the Visa network is taking credit risk, paying the merchant right away, but the settlement happens across multiple days to do that. Same with stock trading. You buy a stock, it may appear to you that you get money or you pay money right away, but in the background, the settlement does not happen right away. So this is the legacy system that the Ether is trying to change, where using smart contracts, we can have almost instant settlements, right? And the logic of that settlement, whatever the logic is, like some conditions are met, the transfer occurs. That settlement occurs like through using smart contracts. So first, the mechanism of exchange is getting changed using Ether, getting at least 10x more efficient, the settlement system, plus the logic of settlement is bringing in. And this has a lot of implications. So if you see the economy that we are building, it's global. So you can work in, at least COVID has taught us that you can work anywhere, right? You can work for any company in the world. So you need to have common denominators in terms of money where, or in terms of value transfer where you work with.
Yeah.
And especially like applications like YouTube or someone you like on YouTube. Right now you can just like them. You cannot financially support them because small dollar denomination transfers are very inefficient and they are not digitalized. So that is where the crypto system can come in. So just imagine a world where you saw a blog post, you really like the author and you want to support him, right? you can just, along with the like button, you can have a contribute button. You press that contribute button, whatever platform, it will be platform agnostic. So whatever platform, contribute button, you can give as little as 1 cent to the person you like. So it builds the whole ecosystem of, knowledge workers, rather than like having so it's a very different world to build with. So crypto is a big part of that.
No,
So any
I
views?
agree, Harry. I think we're just starting to see some early stages of that. There's a crypto product company called Roll, and they have a product where, again, it's an influencer product, but you can directly purchase products like through some form of subscription. But pay for it in crypto with the influencers that you sort of follow and get special access to them. And it's just incredible sort of where things are going. And but I think there's just going to be more and more adoption of these various platforms as things move forward.
Absolutely, Bill. So the sky is the limit. And so we'll come to the drawbacks of Ether, or what are the like things that people have against Ether. We'll come to that. But right now it appears that sky is the limit. Now I want to talk to you about NFTs, because I just that users will or listeners would not be aware. More than 75% of NFTs actually are minted on Ether. So Ether uses the technology of Ether is used to mint NFTs. So what are NFTs? Why is this place exploding? And is it a bubble? Where does it go?
Yeah, I don't know whether it's a bubble. Where does it go? But I mean, NFT is essentially a non-fungible token. I just kind of view them as sort of they're one-offs, right? They're originals. And you can't change them, right? So one-off pieces, original, if you want to call it original artwork or original video recordings, or original anything, digital asset wise, they hold value, right? And so it is interesting to see. I mean, the market has just exploded. There's been some really interesting NFTs, obviously in the media recently for sale. And but I think it's, when you look at it, I've been thinking a lot about this space for the content creator, right? For anyone who's a content creator, the ability to create content and have it automatically sort of turned into an NFT that's of value and tradable value is really, without having a middleman, right? Without having an intermediary, um, is an enormous, I think, just an enormous opportunity. I mean, right now everybody's talking about pieces of art, or they're looking at the NBA, or the soon to be the NFL, video clips of LeBron James shooting his famous 3-point shot, right, to win the championship. But ultimately down the road, think of it for content creators, right? Just think of it, the value for content creators, whether that's recording artists, or writers of books, or creators of art. It's truly going to be I think, a remarkable system in terms of their ability to monetize their value.
Absolutely, Bill. And two things I'm quite fascinated about in NFT world. The first possibility that you're an unknown artist right now, you create a beautiful piece of digital art, and you can set a condition it, because it is a smart contract, you can program it. You can set a condition that each time the sale happens, I get 10% of it. The original creator get 10% of it. So imagine like you are the next probably LeBron James, right? And you create an NFT of your first three-pointer shot and you become LeBron James. So you can actually create value based on that. Or you're a painter. You're not famous right now, so the initial NFT gets sold for $100. But over the years, you become famous, it turns around multiple hands, and eventually it is sold for, let's say, $1 million. Right now there is no way from benefit from that transaction. The artist doesn't benefit, the person who buys it benefits. But in NFT world, you can set a condition that each time the sale happens, the original artist can get 10%, 20%, 5%, whatever he sets at. So eventually, if it goes to 1 million bucks, you benefit from that growth as an artist. So this is quite revolutionary in the world of royalties because it has never worked this way. All the production houses have benefited at the cost of artists, but it is like the artists can actually start having say in their own work. So that is what I'm quite fascinated about. The second part of like NFT, especially books. So if you see all the publishing houses and the cost of publishing, so if you publish any book, a novel or anything, so right now you have to price it upwards because you do not benefit from resale of it. So I buy a book from you, have a book like Small Cap Millionaires. I buy that book from you and then I resell that book. So you as an author doesn't get anything from it. So the authors will jack up their prices to compensate for it, or the publishing houses would jack up that prices to compensate. So the cost of education knowledge becomes high. But with NFTs you can have a big resale market, so the book transfers hand 10 times and still you get benefit. So you can initially lower down your prices in terms of books and stuff. So that's a very fascinating like approach to NFTs that a lot of people would not be aware of. So that is a fascinating one. And I don't know whether it's a bubble or not because it's art, right? Art has value in the eyes of beholder, right? The
Yeah.
it is perception based. I like personally I have seen Mona Lisa. I didn't think that it is much valued, but people may disagree with me, right? So it is perception. So we can't disagree with perception. If someone values a digital 5,000 pieces of digital art at 70 million, they have all the rights in the world to do that. And that is how the art has always happened. Okay. So
But that's
that's
but
quite
that's
true.
just but that's whether it's the art world or the stock market, right? The world is a
Yeah.
big auction mart, right? And so value is in the eye of the beholder, at that point in time. And I've always had a rule, right? Don't argue too much with the tape, right? The tape tells the story, and we live in a big auction mart, and if people are willing to spend that kind of money, then that is the market, for it right now. Can the market change? Absolutely, but it's but I think you're right. Like down the road, you think of the amount of people once they figure out how to monetize their creations, whatever their creations are. I think it opens up a whole new world in terms of I look at some of the stuff like and just in the video in the gaming world, and those worlds that exist, those digital worlds that exist inside those gaming worlds, and what some of those pieces, some of those images, and some of those avatars are going for now in terms of NFTs that are created and so forth. It's staggering to where this thing is ultimately, I think, going to head. But at the end, Harry, it's a creative. It's a great creative outlet, and it's a great way for creators to monetize what they've produced.
And that brings me to like the Google's IPO. So Google IPO'd in 2004. So like Wall Street, the whole Wall Street was like there were less millennials who understood the tech part, and there were more boomers. So it was a generational thing. Nothing against boomers, but you will find lots of reports about Google that they had no clue that this will ever make money. They said that eye pops, like something that you have eyes on, information will never make money, and they were so wrong. Google is one of the players that is making so much money. Same thing with Facebook. They're like connecting with friends, that's never going to make money.
Yeah.
Facebook has the most solid balance sheet of any company on Nasdaq today. It has more cash flows than anyone in the world. So things change and you have to change with them.
Yeah.
Like you talked about stock, the next topic is tokenization. There is a lot of talk about tokenization, tokenizing something that comes from the legacy system, tokenizing something that comes from digital system. So can you share your thoughts about that?
Yeah, like I say, I think if people have a good model and a good use case inside of whatever product that they've created, sort of in the crypto space, I think you're going to see more opportunities in the token world, to sort of take advantage of those opportunities. Just as an example, synthetics, something that we're both looking at, and they have their own token. But ultimately, the synth token is based around a premise that you can effectively create a derivative product in the crypto world, against sort of another product that exists in the real world, right? And so sort of basically a synthetic derivative. And so and they use their token, as the mechanism to do that. So that's just one example. Aave is another example. So you're starting to see again where people are figuring out a use case, and then they're using the mechanism, and using these tokens as a mechanism to exchange value. But ultimately, it boils down to the use case, Harry. So and of course, Ether, for the whole Ethereum network, is the main main virtual token that sort of drives that whole process, right? That ultimately is used to pay the gas that keeps the machine running, so to speak, right? And keeps all those transactions being validated and the system operating. So no, I think there's going to be more and more. We're very, very early stage in this. But as you said, who the winners and losers are going to be, don't know. But I think you have to sort of be in the space a bit, and you have to be keeping an eye for what people are doing. But I just go back to real straight fundamentals, right? What's the use case for the technology? How does the user benefit by it? And there's different sort of value premises, cost being one of those, convenience being another, and then the other side of it is how does the people that created the product, how do they monetize, right? Is it a fair monetization scheme? So if those three things line up, you're in pretty good shape, I think, around the products that we're starting to explore, right? And of course, for us, we look hard at what we call sort of the picks and shovels, of this cryptocurrency boom, right? Groups like Uniswap and Aave and different people like that are sort of the underlying, and Ethereum, of course, the underlying premise of the technology. That's what we're looking at.
Absolutely, Bill. So a lot to unwind here.
Oh
So
yeah.
Ether, if you see, so my view on this is there is tokenization of real world assets that you can do to provide liquidity using something like DAOs or DAIs, right? So you have gold, you can tokenize it, trade it in fractional form. You have a Tesla stock, tokenize it, keep it as collateral, trade it in fractional form. Like you have oil, trade that, right? So you can tokenize everything that is liquid or illiquid. So you have real estate that is illiquid, small and medium scale businesses that are illiquid. So you can have tokens for them. And this is like global risk allocation to global risk capital. So you have a asset that you are interested to share with the world, you can tokenize it, put it out, and people who are interested to pursue that asset can buy it. So that's the legacy world. The second world is the crypto world. So there are a lot of crypto projects that keep on happening. You need funding for those crypto projects. So it's like any other VC.
Yeah.
So they raise funding by using tokens. Now it's like VC. You invest in hundreds of them, right? One or two will work out, but one or two will become Aave or Uniswap. So it's like the risk mechanism is that way, but the benefit of that is global. So it's not limited to a specific geography, specific VC fund. People like your idea, you can become an overnight success in this world. But risk is also there for investors who are getting into it. The third part about the Ether system. So first was tokenization of real assets. Second is tokenization of digital projects. So whatever digital projects that you have. The third part that I see that where Ether is going is it is trying to deal with different problems, like it has a lot of gassing fees right now. So how to deal with that? The energy costs are quite high. How to deal with that? So these are the things that are happening in the space right now. Tokenization of real assets, tokenization of crypto projects, and tokenization of or solving of those problems that Ether has. So just to continue that discussion, so what are the problems that you see in this Ether space?
Yeah, I kind of see the same things, Harry. Like I think ultimately scalability, um, matters. If they're going to take this product or this technology sort of mainstream, um, ultimately they want to be able to do more transactions in a shorter period of time, right? And so, and to do that, you have to have, I think, a different consensus mechanism. And so that's ultimately, I think, where they're headed. They're moving more to a proof of stake consensus, and moving away from proof of work. That so, I mean, time will tell whether they've ultimately made the right choice, in that. But I think with proof of stake, um, you do have a mechanism by which you can maintain the network, which is obviously vitally important, but also um, increase the efficiency of your network, right? So that you can transact a lot faster, more transactions, more speed, and so that'll allow the system, the network, to be able to do some things that it currently can't do now. Ethereum, quite frankly, is faster than is operating faster than Bitcoin currently, but I think ultimately that's where they're headed is more of a proof of stake, staking type of system, and I think in the long run, I think that'll benefit them. Um, they've got an outstanding system right now. They've got a very good sort of protocol, and they've got good market adoption. So I think they're just working on sort of the last elements to sort of fine tune the system, and we'll see where it goes. Like but ultimately it's the users of the network and the I'll call it the maintainers of the network that ultimately are the final sort of arbiter in terms of whether it was the right decision or not.
Yeah, so just to unpack that, so listeners who are not aware, so there are two mechanisms where you can actually validate transactions. It's either proof of work, which uses a lot of computing power to solve hash functions. So example is Bitcoin. It uses like a lot of computing power, specialized chips to solve a hash function, after which the recording of transaction happens in a simple way. It's not that simple, but
Yep.
to simplify that, right? Ether currently uses that, but Ether has a different mechanism right now. It doesn't use a specialized chip, it uses general purpose GPUs. Now it becomes cheaper to mine Ether because of that, because you can use any GPU that you have graphic processing unit to mine it, rather than having those special A6 chips that are never in stock, right? They're always running out
Yep.
of stock for Bitcoin. So that's the advantage that Ether currently has. Now they're moving to some unknown thing that is called as proof of stake, where instead of having computing power, in order to mine Ether, you need to have Ether. So it is like the more Ether you have, the more you would be able to mine. So it is little different than having computing power than that they're moving to. Now I don't know how the move goes, but that's the big change that is happening with ETH 2.0. There are a few more things that they are doing. So they are solving few problems that are computational problems right now in the computing world. So that's the thing. But the whole space, I see a problem with it. It's not ubiquitous. Like I'll give you an example. So computer science or internet, right? So we are talking through video conferencing, but in the background there is TCP/IP protocol and different applications layer that are communicating with each other, and probably you're have communicating through a wireless network, but we are not aware of that, right? We are just using it like it's like a video call, like we call each other and that's it. Same way, like people may not be aware, they use Unix, like Linux, so much in their life. The whole Android system was built on Linux, and like Google, like even Apple, if you're using Apple, that is built on something called as Unix, which is a sister of Linux, right? But people are not aware of it. So unless and until crypto becomes ubiquitous, so it should be like I'm transferring money, or the money is getting transferred, that's it. The digital money is getting transferred. It should be as simple as that, but the currently the space is not simple. It's way harder to navigate those apps, may it be Uniswaps, may it be like any yield farming protocols. So it is little hard to navigate. So unless and until they build a good user experience, that is a big problem that I foresee for this space.
Yeah, I think you're right, but it's like anything, Harry. It's so early, sort of in the evolution of the space that um, I think. I mean, I think they're working at when I just look at sort of ERC 1400 protocol, like for sort of universal token, I think about the challenge that you're sort of describing, where they want more interoperability, right, between various products. You look at companies like Chainlink and what they're doing to sort of connect outside data with the blockchain so that there's sort of more of a seamless transition. So I think there's a lot of work being done by a number of companies. And again, ultimately, it boils down to, yeah, for this to be really, really mainstream and for people to use it in a very seamless fashion, it has to be easy, has to be convenient, and it has to be cheap, right? And it has to be secure,
Exactly.
right? So so this is what I talk about. Use case, basic fundamentals, right? Is it easy? Is it cheap? Is it secure? Once those things are in place, well, that's when all the I'll call it the late adopters start to pile in, right? But that's why I say we're still very, very early in the game. We're working through the mechanics. I mean, we talked about this in the last video, right? The early stages, the early emergence of the internet, right?
Yeah.
From its early stages being a university project with a few universities, out of San Francisco to becoming the internet as it exists today. This is kind of where we are. We're in the very early stages. So again, finding companies who are working on those infrastructure challenges, um, that's I think where you want to spend a lot of your time, energy, and not get too caught up in the hype, but just sort of look at what are they doing, what are they trying to do, and do they make things more convenient? Do they make it more secure? And is there a good value proposition? So that's kind of what I think makes a lot of sense to me.
Absolutely, Bill. And just to borrow from your internet analogy, like when internet was started, no one thought about Uber. That was an application that
Yeah.
no one could foresee, right? No one thought about an Instacart where you order groceries, it comes to you. No one thought about this AI world and Instagram and all of that. So a lot of applications in this space are yet to come. They're not there yet, right? So that is like maybe self-driving cars, they cannot have a bank account because machines cannot have a bank account, but they can have an ether address, like they can have a digital crypto address. So each time, and let's say a self-driving car does certain function, you can pay that self-driving car in like a crypto, in your own cryptocurrency. So that is like these applications are not even thought of yet. So it is like way out there. We are early in the space, right? It takes time, but the pace of innovation has shortened. So if you see
Yeah.
how AI came in, how like VR is coming in, how other things are coming in, the pace of things have shortened. So initially it used to take multi decades to come in. Now it is 7 years.
Oh,
Probably in few years it will be 5 or 2 years where the technology changes so fast.
innovation curve is staggering. Hard for old guys like me to keep up, Harry. But
You're young, Bill.
we're trying, right? We're trying.
Yeah. So how I'm little bit changing gears from the tech side of it. I'm coming to investment side of it. So how you look at Ether as an investment. So allocations for advisors, what they need to focus on, the risk that it has. So from the investment side of things.
Yeah. So, again, without, venturing into the world of investment advice, just general principles
Yeah.
are, you you want to have a certain amount of, if the risk, if you have the risk appetite in terms of your overall goals and objectives, and crypto sort of meets those risk parameters, then yeah, having a certain allocation in your portfolio makes some sense. Generally, I like to think of anywhere between sort of 1% and maybe 5%. Some people are 1 to 2%. Like when I look at Morgan Stanley and some of the recommendations to their clients, they're starting to put their toe in the water around crypto. I think that makes some sense. It's like anything. If you're going to invest in it, you should know um, what you're investing in. or work with professional advisors to sort of help you make those decisions. But I think as an asset class, it's clearly becoming a unique asset class, what we call a negatively correlated asset class to the market. And when you have the market going one direction and then the other asset class maybe goes in a different direction, your overall return gets boosted generally when you do that, right? We call that sort of negative correlation asset pooling. So I think crypto assets kind of fit inside of that. And I think a small allocation makes some sense. How you do that is kind of up to you. Some people want to own the crypto asset themselves, like Ether or Bitcoin. Some people want to just buy a stock that may be related to the crypto world. Say, as an example, like Hive, right? I've been sort of looking at that recently. It's a mining company, and that has some good. It looks like some good access to mining equipment in a very tight market, right? So, so again, do you buy a stock that is sort of levered to it? IBM is doing a lot of projects in the blockchain world with a Hyperledger Fabric, right? So they're mostly in the enterprise space around blockchain technology, but they are really becoming, sort of the main player in that space using Hyperledger, right? So maybe you buy IBM, right? And so a lot of different ways to play this, Harry.
Absolutely, Bill. And like just to unpack, there is a concept of correlation. So few of our listeners would not be aware of it. So negative correlation means like Ether, Bitcoin, and this digital space is not much correlated to the market. So they are their own animals. They behave differently. So a lot of portfolio management theories suggest that adding small allocations to something that is uncorrelated to your main portfolio will actually improve your risk return profile. So that is what we mean by correlation. And like Bill said, it's a smuck insurance. So if everything goes wrong, like people will used to float to gold, now they will float to like Bitcoin or Ether. So that's also there. One thing I want to focus on, and I'll put the charts there. So Bitcoin, like Ether, has actually beaten Bitcoins. Ether
Yeah.
is much more volatile than Bitcoin. So since its inception, if you calculate the return graph, like Ether has a higher return, but it is much more volatile too. So whoever is looking into investing in this space needs to be aware of it. That Bitcoin, if you think it's risky, so multiplied by 2 times, that's Ether for you.
Yeah.
Returns also, like if you average it out, the returns are somewhere around 250% more, right? Ether has given than what Bitcoin has given. And I'll put the exact chart in when I edit, but that's how it looks like. And the third part that you said that I found quite interesting, there are various ways to get exposure to. So if you want to get exposure to like something that holds Ether or Bitcoin, so maybe a micro strategy or a Tesla, because they have Bitcoins invested in their treasury, something that may use cryptocurrencies to settle, maybe that Square that is using cryptocurrency or thinking about using cryptocurrencies to settle or transact, or Visa that is using USDC now, that is a Ether token to settle. So something to do with that to get exposure. So stocks like that. Then you can go into miners. So Hive is one of them. Riot is one of them. Hive is much more focused on Ether. It mines more Ether than Bitcoin. Riot mines more Bitcoin rather than Ether. So you can pick one of these two. Then there are like Galaxy Digital. So Galaxy Digital is a fund manager in digital assets. So they make investments in digital projects. So recent investments, they have put a lot of money in decentralized chains like Tron and stuff, and they put some 25 million in. 2 weeks later, they have 4x that. So the stock is right now off the charts and booming right now. And it's none of this is investment recommendation. So don't
Yeah.
consider this as investment recommendations. And both Bill and me have stake in this space. Both of us own Bitcoin, Ether, or other digital forms. So bear that in mind. So multiple ways to do it. Buy the currencies themselves, by stocks that are related to that, by IBM that is more on private blockchains rather than public blockchains. So that's a whole different application. Or buy something like Galaxy Digital, who is a hedge fund into this space. So
Yeah.
different ways to get exposure.
No question about it. And ultimately it boils down to an individual's, own risk tolerance and their net worth and the ability to take risk and absorb risk and ride through things. But just you still have to know what you're investing in and why you're investing in it. And same old trading rules, right? That we talk about in small cap, whether it's crypto or small cap, right? When do you get in and when do you get out, and how do what are your rules for entry? What are your rules for exit? So that you're not letting sort of a pure emotion sort of drive your decision making, right? So, all those same rules apply, Harry, and whether it's crypto or small cap investing. And we just try to give, our listeners I guess, a little bit of our experience, and to help them to understand the process, right? It's not so much the name, or not so much an individual name, and it's not an individual name that's certainly at a certain price or entry point. It's the process. What process are you using to help you make decisions over the long term? That's really sort of our focus.
Absolutely, Bill. Like the Chinese proverb goes, never catch fish for anyone, teach them to catch fish.
That's right.
Bill, there is this Coinbase listing that is happening on Wednesday. So, your views on that, because that is big for this space. The valuations that I'm coming across are over $100 billion, and the whole investment community is like either pro it, right? They are like Bitcoin and crypto maximalist, or they are like this is a big tulip bubble. So, what's your view on that? Because that's a big listing. That's like Facebook got listed at 100 billion. So it's a big listing for something that's only 12 years old.
Yeah, it's a great question. I kind of look at it from a couple of perspectives. One, from a pure valuation perspective, if you look at earnings and growth, you can build out some type of a model that would give you some type of intrinsic value price. So that's kind of one way to sort of value. The other side of the coin here, Harry, is just look at the market. And how much money's moved into the crypto space, how much interest there's going to be in this, and the other side of it. What's interesting about this is it's a direct market offering, right? Versus going through a bunch of intermediaries. So they're sending a message about, hey, listen, we're going to come out and we're going to sell our stock in sort of a more direct way, to the public, and so I just think there's a huge amount of interest here. Where it goes to, what it looks like a year from now or 6 months from now, not sure. But I think in the short term, I think there's going to be a lot of eyeballs on this. There's going to be, I think, a lot of movement in the early stages. But again, it's like anything. You have to decide how much is right for you. Um, what are your entry points? What are your exit points, and why? Rules-based investing. It's just like, and it's any other trade, right? You just have to decide if this one's right for you. But it'll be interesting to see what happens Wednesday, that's for sure, and how far this moves. But yeah, there's a number of exchanges. There's a number of different folks looking at different products in this space, pouring money in different ways. So this is an example of that, where I say you can get exposure in different ways, right? This is just another way to get exposure and into the space. So it'll be fun to watch, and my eyes will be glued Wednesday morning at the open, Harry.
Yeah, so just for listeners who would not be aware of it, so Coinbase is one of the big brokers or dealers in crypto. So it gives you an opportunity to trade, to earn interest and all kind of like crypto functions. It is big on institutional. It is getting a lot of eyeballs from institutions. So it is a digital asset holder for them, a custodian
Yeah,
for them. So that's also a big thing. But the hype around right now is they have grown their revenues quarterly, like this quarter versus previous quarter, by 400%. So
yeah,
whatever
yeah,
their revenues was, they have done 4x of that. And that is not normal in like the legacy world. Companies rarely grow at that pace. So that's why it is getting a lot of eyeballs on the good side as well as the critique side too. Again, like you said, risk management is the key. Does it fit into my portfolio? Does it fit into my risk profile? Am I willing to lose money? That's the big hard question you need to ask. And how much? So you need to trade with stop losses or something like that. And maybe how long do I stay with it? Because there are other players too that are coming up. There is Binance, there is BlockFi, and it's a global space. So anyone anywhere can become a crypto broker. It's not related to US, it's not related to Canada. So it's an ever changing space, and Coinbase is also an ever changing company. So like forecasting that 4x jump in revenues, that would not be like what I would do, because that is not sustainable. Like that happened because the space got so much eyeballs. It may or may not continue. So you have to trade with that understanding.
Yeah,
So just
no,
to
no
end,
question about it. It's you have to separate sort of the hype from the reality. But again, it goes back to the same principles, right? What's my entry point and why? What's my exit point and why? And make sure you don't sort of get sort of whipped around and whipsawed around and yeah, and like I say, just to let listeners know, it's right. It's gonna ticker is coin and it's going to be trading on the Nasdaq, and so it'll be interesting to see what what happens Wednesday and through the week, right? If people sort of move in and keep, I've seen these things get pretty hot and frothy, right? So it'll be interesting to see how things go. But this is we're in a whole uncharted territory. The amount of money that's moved into the crypto space, Harry, in the last 6 months is just staggering to me. So
exactly. And
yeah,
nothing wrong in trading hypes. Means hypes, everything is hype trapped right now. If you see valuations of S&P 500, even that doesn't make sense. So nothing wrong with trading hypes, but you need to know what you're getting into.
yep, for
So
sure.
yeah, so that's there. So final thing, Bill, before we close. So favorite ETH quote or a meme?
Yeah, I had one that I kind of printed off here, Harry. So it was I was thinking a lot about like Ethereum and what it is, with the smart contracts and the ability to sort of execute code and so here's one from Nikola Tesla, the famous Nikola inventor, Nikola Tesla. In the 21st, so basically it says in the 21st century, the robot will take the place which is of slave labor, which is occupied sort of in ancient civilization. So essentially, what he's saying is, the future is not going to be around labor, but it's going to be around robots. And so this is Nicholas Tesla, like making that comment, many years ago, and I'm not sure when he made that comment, but ultimately that's what Ethereum is all about. It's about automation. It's about software automation to sort of transact things in a more automated way. And what's the impact on society? Don't know, but I think there's going to be a lot of disintermediation of a lot of people that are providing a lot of service right now, and a lot of that service will ultimately be taken over by software that automates. So I just thought that was kind of an interesting quote from one of the great inventors of all time, that sort of looking into the future. So
And that's the thing I'm most fascinated about, Bell, like about Ether, about Bitcoin, about this space. So these opportunities, these VC opportunities is what I call them, like venture capital or private equity opportunities. In the legacy world, they are not available to retail investors. You need to
yeah,
be an accredited investor to actually find the next Tesla or find the next Google or something like that.
yeah,
But this crypto space has evened the playing field. So it is actually retail who had front run institutions for years. Institutions are just warming up to this space, but retail has been in this space for last 12 years. So that's the big difference. So it democratizes access, which is very important. And like people who could see the potential, they made money, right? So that used to only happen in the accredited investor world, the
yeah,
wealthy world, if people
yeah,
are not aware. So you need to have certain wealth to invest in private equity or VC because the risk is high. But in crypto space, you don't have rules like that. So it probably globalizes and democratizes innovation. That is what I'm most fascinated about. I don't know where it goes, but it is a good global access.
I agree. It is as I've said when I first started looking at blockchain, it is so disruptive on so many levels, right? This underlying technology of a decentralized technology where you can exchange value. I don't think people have their head wrapped around it. I still have a hard time getting my head wrapped around it. But you just look at the Coinbase Wednesday morning, right? They're
Exactly.
not going through Goldman Sachs or Morgan Stanley to issue that stock, right? They're
And
they're
that's
they're
also like,
they're coming straight to the public and saying, listen, we're going to cut out the middleman, we're going to lower the fees, and we're going to issue the stock at what we think is a fair price, directly to you,
absolutely.
directly to you.
And let
Come
the
on,
market decide.
come on, right? I mean, and the SEC has said, hey, you know what? We're supportive of these types of ventures and these types of companies now. Do you, do you understand the implication of that? Like I know you do, but
Yeah.
for the listeners, that is remarkable to me. That a crypto-based exchange has essentially told the mainstream market, investment banking community, we don't need you. We're going right to the public, and we're just going to do this thing in a direct way. That to me is just we're in a whole new ball game here, right? If I'm an investment dealer, if I'm running the investment dealer, which I always called it the casino, right? Like the guys that sort of
Yeah.
ran that own the casinos. If I'm running the casinos, I'm worried now, right? Because the players now have a different way to operate, and they're not necessarily going to come to your casino where you make all the rules. The rules are changing. So fascinating stuff, Harry. Fascinating stuff.
Absolutely, Bill. So, little bit to add on to that for listeners who are not aware. So, in the traditional IPO world, so investment banks underwrite companies. So they buy stock from companies. Effect, it's not exactly that, but they buy stock from companies and then they sell it to investors. So they make a big spread. So if the company is valued 30 billion, like Coursera was, like, or 3 billion, but it gets listed at 6 billion, the difference goes to the investment banks. So
Yep.
that's the way they make, along with the fees that they charge. So institutions front run IPOs, retails are left to hold the bag. You can say it that way. Not always, but sometimes. But here the Coinbase is saying we don't need this middleman. We are going straight to public. Let the market decide what is my value. If the market sees value in me of 100 billion, I may get valuation of 100. If it doesn't see value in me, it sees 50 billion, I may get 50 or 150. So it is completely removing the IPO mechanism, and it's not the like Coinbase is not the first company to do that. Google did that, but Google already had pricing power. So it
Yep.
says that crypto also has pricing power right now. It
Yep.
can let the public decide.
Yes. Yes. Yeah.
Yeah. So we'll end with that, Bill.
Yeah.
So Ether is robot money, like you said. Robots need to communicate with each other. Automation needs to communicate with each other. So the value that they are going to transfer is probably one form of crypto. We don't know whether it's Ether or something else, but that's how the space is moving towards. Thank
Yeah.
you, Bill, for your time.
Thanks,
Right?
Harry. Look forward to next time.
Yeah.
Okay. Take care.